It's Vikas Pershad, portfolio manager at M&G Investments, Johnson right now. And from where he's perched, Vikas, good to know whether you're in Singapore or New York, but from wherever you might be, I'm presuming it's Singapore. The FII mind in you, how has it looked at all the recent developments in India when the valuations were lower, but the Reserve Bank of India did all that it could to shore up confidence?
Well, what a difference a year makes when it comes to liquidity and the tightness around the financial system. What has not changed in the past year is our constructive view on India. When I was speaking with you last time, a few weeks ago, one thing I'd mentioned is that we remain fully deployed in our India strategy, but as a firm, we were looking to increase our exposure to India and have that converge with the exposures that we've had in other parts of Asia, in North Asia in particular, and we have indeed done that. Late February was a great opportunity for us to increase our India allocations. We continued that in early March. We continue to do that even now. And it's across sectors. The financial sectors, especially the private banks and NBFCs, is one area where we've been very active this year in increasing our holdings. But there's a lot to like in India. That has not changed. If anything, I'm surprised by the pace of the rebound just over the last couple of weeks, given the uncertainties that we have. But you always have to ask yourself, what is in the price? And at the end of February, a lot of bad news was in the price after the 5-month-long sell-off that we had. Long term, nothing has changed for our view, whether it's small caps, large caps, financials. If there are certain areas where we are still cautious, even though they have underperformed, it's the IT services names. But again, we're reevaluating that call given the underperformance that we've had, the earnings season that we've seen. And when you look at how IT services reacted post-earnings and how the private banks reacted after very strong earnings, it gives you a signal of what is in the price, given how they've moved since then.
Vikas, hi, good morning. Tamanna here. The point you make about what is in the price, what do you think is in the price right now when we're seeing the rebound? And I'm asking this in the context of the concerns that we were talking about just a few weeks ago. One of them was the quality of corporate results. That's yet to play out, decent lot from a couple of banks, IT largely disappointing, and we have to see how that goes. What's in the price if we have an economic slowdown fears? I'm just wondering if anything has fundamentally changed from the concerns we were all talking about a few weeks ago as well.
Overall, in India, I don't think that's the case. If you look at our time horizon, which is 2, 3, 4 years out, now, if you look at it sector by sector, yes, certain things have changed. There is more uncertainty in the automotive space and in auto parts, auto ancillaries, where we've been active. Last time I was on, Amin was on from JP Morgan as well. We had a good 3-way conversation about that. And for IT services also, the outlook has gotten a little bit cloudier. But when you look at the performance, they have fallen quite a bit. So we have taken advantage of some of these falls to add back some exposure at the margin to both of these sectors. If you look at other sectors like consumer staples, the picture is more mixed, and I don't think that anything really has changed. The other difference between the end of 2024 and the beginning of this year is the increased exposure that we have had to healthcare services. We've switched some pharma exposure to healthcare services, diagnostics, hospitals, large cap, small cap as well. And then also we've been on the lookout for entirely domestic stories that are not contingent on the new policies coming out of Washington or Beijing or Tokyo. And there's plenty of choices in a market like India. Music streaming is one area that we're excited about, so we have exposure there. When I look at the market today and the opportunities we have on offer, the only thing that is scant, where the pipelines are thinner or less full than they were a few months ago, is in the ECM area, in the IPO arena. We think that will probably pick up as the markets have started to come back, but we continue to be very selective in what we spend our time on when it comes to new companies, especially in this environment where we're seeing disconnects and dislocations among names that we know.
So rightly, put Vikas, the IPO streamline has dried up a fair bit. But did I hear you saying that you are adding on IT on the margins now?
Yes, we have, because of the magnitudes of the falls, and we remain underweight the sector, and the name count that we have in that sector is very low. It's the lowest it's been in years, actually, since just before COVID. But when we look prospectively and we look at the valuations and we look at the magnitudes of some of these falls, then yes, we've started to reduce that underweight, but not materially so. If IT had been the only sector that had been underperforming to this extent, then it would be different. We'd probably be adding more. But given the sell-offs that we've seen across a broad array of companies, small caps to large caps, we've added back a little bit less.
And you're favoring your smaller cap or mid cap IT players or the larger ones?
For now, the smaller companies, because we've seen even larger disconnects. We haven't seen all the earnings from all of them yet, but we have seen from the larger ones, and they've not been so exciting.
In terms of just following up on the point you made, the hunt for domestic-facing companies, and interesting to hear about a streaming app there on your list. But what would be the spaces that you see of safety when you're seeing global turbulence, where domestic companies or domestic-facing companies would come in? Would financials, for example, make that list?
Financials do make that list, and BFCs make that list. Pan-India, so not just the ones focused on North India or in Bombay, but we have exposure to NBFCs in Southern India as well as South-based companies. What we don't have exposure to directly, for sure, is microfinance. There might be some of the larger private financials that we own that have some exposure, but you were talking about that just before I came on. Microfinance is tricky, so we don't have exposure there. But overall, I would say if we take a step back first and then we get into the sectors, India overall is relatively safer than other countries, and which is why we have increased our allocation across the firm to India. If you look in March, now again, the starting point was lower for India because of the 5-month sell-off, and it had underperformed to start the year, but it was the best performing market in the region. And post-Liberation Day, it was the first market to erase those losses, and we continue to grind higher, 10% or so, just over the last 10 trading days in India. I'll share a stat. More than 70% of India's revenues for the NSE 200 come from within India, and that number is growing. If you look at the US, less than 60% of S&P 500 revenues are from within the US, and that number is falling. So when you look at India, it is a largely domestic story. There's a lot of companies to look at. It's a very broad and deep market. And so we're spoiled for choice on our time horizon. If I were trying to outperform the market today, tomorrow, over the next month, it would be trickier. But we see a lot of businesses that we want to own that represent where India is going, and we want to be part of that on a 3-5 year horizon.
Guys, the piece on MFI is interesting, right? Because it's split right down the middle. There are people who are betting on this being the turn of the cycle. There are people who are saying that the pain is so large, and there will be some more washouts that will come in from states, etc., which are, now giving out dole-outs, that it will be persistent and not a cyclical upturn. Which way are you veering on? I'm guessing you are veering towards the cyclical uptick, maybe. If so, why?
Well, we by design have no direct MFI exposure in our portfolios. Okay. We have in the past, and we thought that this is not an area where we can have a sustainable edge, was my view. So we don't have that exposure anymore. We keep an eye on it. It's not just about the valuations. Optically, in this sector, valuations have been low for several years now, but the names continue to underperform. It is just the nature of the business. It serves a very good purpose, but there's a difference between the purpose and having a good business delivering that purpose. And what we see is there are plenty of other choices elsewhere. And so we direct our capital to other names within the financial services sector.
Got it. Because one macro question on the markets, at least. When the markets were correcting, everybody made this point about why is it that India can trade only at average multiples? Why can't it go below the multiples? So why 18 times? Why can't it be 17 times or 16 times when earnings growth is not there? Now, when the markets have shifted, the narrative has also become that it was fairly cheap for a market which is looking good in an otherwise slightly dull world, and therefore go out and buy it. So my question to you is it possible that even if earnings growth stays sluggish and not 15-16% but 12% for FY26, the multiples may still be higher because India might still be better off than a lot of other markets at a point of time when money is probably moving out of the US, and a small pile out of that deluge would be good enough to take Indian market multiples higher. So can India trade at higher multiples despite earnings growth being slow?
That's fair. I would say it can and it should, because if you look at the long-term earnings growth, that remains intact, whether it's a 6 to 12-month relative slowdown or a deceleration relative to expectations. That's a different question, and that's what was priced in. in the sell-off from the end of September until the end of February, and the growth expectations have returned a little bit. Also, what we've seen is India has become more appealing relative to other markets. The price of oil is behaving when it comes to India. The price of the rupee against the dollar also behaving. That is helpful, and you have largely intact growth stories. Even if the overall aggregate market growth, earnings growth, falls from 15 to 12%, within that you have 6,000 plus listed companies. You have over 1,500 that have a market cap over 100 million US dollars. It's not difficult to find sectors within the overall market that are growing faster than the market, and then within those sectors, if you do your homework, you can find the relative winners as well. India remains a very good market for long-term absolute equity return appreciation or equity appreciation, but it remains a great market for active managers as well, for relative stock picking.
Vikas, I'm just wondering how you're feeling about gold right now, because even as we're speaking about equity, it's all about gold across the board. How are you, organizing this into your investment plan or looking at the gold factor? Do you think that we're going to see a further upside continuing?
I would assume that in this environment of uncertainty, and we don't really have any macro views on gold other than that it's understandable that the price keeps going higher. We don't really express that in the portfolio directly. There are companies that make gold loans. Some of the larger financial institutions are now increasing the attention that they pay to this. The short answer from my view is that I'm not surprised that the price of gold is going higher. I would also not be surprised if it continues to go higher, but it's difficult to implement that view in the way we invest in our portfolio.
Truly it is. Thank you so much.
I will say,
yes.
personally, I'm a gold bug. So we own gold, and I am a fan. There's an article recently that I read about all the new gold bugs in Asia. So I get it. It's a fair question.
No, I think the gold bugs, at least in India, are very old ones. They're all the.
Well, I'm getting to be one of the old ones too now.
Yeah, and they're all the Indian women who have turned out to be the most astute investors. Thank you so much, Vikas, for speaking with us. Always a pleasure.